Stop trying to short the top just because the RSI is at 70. The Relative Strength Index, probably one of the most misunderstood indicators out there. Most traders use the RSI as a reversal indicator, but in this video, I'm going to show why it is actually a momentum indicator. I've made almost every trading mistake in the book. I simplify the market so you don't have to learn the hard way. Now, just like all my other videos, please note I'm not a financial advisor and everything we discuss here is just for educational purposes. This is all based on my own research and mistakes, and I highly encourage you to get out there and do your own due diligence. So back to the RSI. I think a lot of people misunderstood how this indicator is meant to be used. A lot of people have been taught that you're meant to short when you're in overbought conditions and buy when you're in oversold conditions. And while that can work, there is a lot of context that is missing there. And this isn't the fault of the people actually using it that way. I think the blame lies with people who have taught it the wrong way. When the RSI is above 70, this generally indicates overbought conditions, and when the RSI is under 30, this generally signifies oversold conditions. A common phrase out there is essentially summed up as, when the RSI is above 70, we are in overbought conditions, and when it's below 30, we are in oversold conditions. Now, from a psychological perspective, people interpret that as, okay, well, when we're in these areas, I'm meant to look for shorts and look for buys because we are overbought and oversold. And I can understand why people think that way. I know this because at one point I was one of those people. But that definitely stems from a level of being impatient. And as Warren Buffett has said, the market is meant to transport money from the impatient to the patient. So I want you to change the way you look at the RSI. And I'm going to do up something very easy that I think we can all follow along. This should be very easy for all of us to follow along. An RSI does not mean reversal, an RSI means momentum. While it does show us overbought and oversold conditions, that is just telling us which direction the market is trending. I look at those zones as dumb, stupid, idiot zones. If we're in overbought, unless we have a clear divergence or some kind of signal, I'm going to assume everyone is just either dumb, stupid, idiot buying or dumb, stupid, idiot selling. I realize it's a bit crude, but it's what helps me think of it. Probably a more concise way of looking at it. If the RSI is high, bulls are in control. If the RSI is low, bears are in control. Now, to get my point across, I'm actually going to show an example on a chart. Now, I am going to pick an area which I think gets my point across very easily. So I'm going to chuck on what I'm going to do is I'm going to put this in replay mode first. I'm going to start it from this point I have picked. And we're now going to chuck on our RSI indicator. Now, in terms of settings, which I recommend you use, I think just keep it default. That is what most people are going to be looking at, and I just highly recommend just keeping yourself on the side of the majority. Now, again, this is a very cherry-picked example, but I think it's important because it really helps just express this point that I'm trying to get across. The summary is, unless you have a really strong reason to, don't short when you're overbought and don't buy when you're in oversold. And the reason for being is this. So, we can see down here that we are in, the RSI is starting to develop. We're currently at 66 approximately. And this is a Bitcoin monthly chart. Again, I know very cherry picked, but it's to make it simple to help you understand what I'm getting at. So if we start moving this chart along, so we're not in overbought yet. Okay, we can see here, the monthly hasn't closed yet. But we can see down here that we are now starting to trend into overbought categories. If we keep going along, wait for this monthly to close. There. So, let's just assume that this is a trader who at least has some kind of knowledge under their belt, right? So, they see this candle right here and are thinking, okay, that's very bullish, but we're now in overbought. I'm going to look for a signal to sell. They're not going to be shorting straight away, but they need a strong-ish reason to. Or at least a reason. So we're going to keep going across. Wait for this monthly to close. Okay, there. Now, this trader is quite aggressive and they're thinking, okay, we can see that sellers have now stepped in. We've got this quite evenly distributed doji candle, but that's good enough for me. I'm going to short. We're in overbought categories, so sellers should be stepping in soon, right? So let's just say they sold off the rip. stop on the high and take profit, say, somewhere down here. It doesn't really matter. Let's see what happens. Got stopped out there. Now, the monthly's closed, right? Monthly's stopped out. They're thinking, okay, first trade didn't work out. I will just look for another opportunity to short. All right, we now have this monthly candle right here. I wouldn't say it's really developing a strong bearish sentiment just yet, but you can argue, okay, let me make this white so it stands out a little bit more. We have now closed below this previous all-time high. The candle shows that sellers have stepped in. I'm happy to rip another short. So they shorted off to rip again. Stop on the high. Now, again, I don't recommend putting your stops right on highs of wicks because there's a good chance that it's going to get taken out. But for the sake of this example, they're putting the stop right on the wick. Take profit. Well, I lost that previous trade. That's fine. But let's put it down here because I think that's reasonable. We can see the RSI is trending down and we are in overbought category, the overbought conditions. So this should be a good trade, this trader's thinking. Keep it going, monthly's coming to a close. Got stopped out just right there, okay? Now, this person is starting to get tilted, but they're like, okay, I'm really thinking that we are just have been overbought for way too long now, so I'm going to look for another short. At least they had some smart not to do another short right off the rip, because this is quite a bullish candle. Keep it going. Okay, that one closed. There's no real bearish signal to get short right about now, so they're going to wait for another monthly close. Okay, they're quite tilted at this point, and they've thought, okay, this candle has now closed above the high of this previous one. I'm impatient. We are at like around 88 on the RSI, so this is a really good short. I've been taught that we need to short in overbought conditions, right? Stop right on the high again, and because we have quite a big bullish candle here, you can argue that there is a fair volume gap, fair value gap, whatever you want to call it. And that is a whole nother topic in and of itself. Smart money concepts are a bit, how you going? But anyway, we're focusing on the RSI just for this video. Stop, let's just say part way down the candle, not the full way, let's say that, okay? All right, let's see how we go. All right, that monthly closed and we actually did not get stopped out. And this trade is now thinking, okay, I didn't get stopped out. It did not take out the high. So that's telling me that there is a battle going on. So I'm going to stick with this short, right? I'm happy with it. I'm not going to add to it because I've done my ass on 2 other bars here. But I'm going to stick with this short. So we are now in the next month. Got stopped out. This candle is now really starting to show a lot of strength. So now this person's like, wow, I've done my ass 3 times in a row trying to short this uptrend. But the RSI was overbought. So what's going on? They might look for, I don't know, let's just say one more bar to short on. They've gone, okay, there is this hanging man candle right here. Quite a good argument for a short. The RSI is starting to trend down again. We peaked at 94. We're now at 85. This trade is thinking, okay, let me give it one more go, right? Like let's try and rip another short. So entry right off the rip, assuming, let's just say targeting the previous high right here and stop on the stop on the high again. Again, don't recommend doing that, but it's just for the sake of this educational video. So let's see how this next trade goes. Already stopped out. Bang. Now, I'm not going to pretend to be this trader anymore. They've had 4 trades of being stopped out, but we've been overbought for this long. If I exit this replay and we come back to where we were, right? We can see that we stayed in overbought from, let's say, December 2016. And the first time we actually went below overbought conditions was in, right here, March 2018. Now, if we ignore that and assume we just take the all-time high, which is right here, That is 365 days of being in overbought conditions. That is a long time to just be trying to short. Do you understand what I'm trying to say here? Just keep it simple for yourself, right? And if we take then into account the time it took to get below overbought conditions, 455 days. Again, I understand that this is very cherry-picked, but I think it's an extremely good example of why you need a good reason to short if you're in overbought conditions and vice versa. If you want a video on some good ways you can use this, like you can see one right here, we cross below this EMA. I don't really use the RSI too much, but I do think it is actually a very useful indicator, especially if you use it for divergences. That is about it. I think that really expresses my point. Just keep things nice for yourself. Be a little bit more patient, especially when it comes to the RSI indicator. That's all for this example. Enjoy your day.